Good morning, everyone. Welcome to Admiral Markets. Thanks for joining us in this live webinar. I'm going to take a look at moving averages specifically and Forex markets in general, and we'll take a look at some indices as well. So hope that you're doing well. Let me know how you're doing, and we're going to kick off the last week here in October. All right, before we take a look at the charts, be aware that this webinar is intended for a global audience. It may not be suitable for everyone to view. Therefore, take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out more about that and other conditions and details. Also, trading for exchange or global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar or recording, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, so Admiral Markets, and just in case you're not aware, has a lot of great info on the website. You can find out analytics, education, promotions, also a bit more about trading platforms. Supreme Edition has 56 extra features on top of what is typical for MT4. Really a lot of things ranging from the sentiment trader to correlation matrices to trade management, allowing you to do the money management without really necessarily calculating, what is the risk. I mean, you can easily calculate the risk, use the risk to calculate the lot size. That's what I want to say, instead of doing that with an Excel sheet and stuff like that. So that's very practical and very useful. All right, so to take a look at that and check out Admiral Markets on this admiralmarkets.com website. All right, so we're going to take a look at moving averages and use them to look at trends, opportunities, and perhaps even for entries and triggers. All right, and maybe filters as well. It's a method you can use to see if the setup kind of is interesting, and it's a checklist for entries, and you can use this with any tools and indicators you want. But today we're going to focus on moving averages. Tomorrow we got big news. Interest rate on the dollar. I don't think it's going to happen. I don't think we're going to have an increase. But tomorrow we do have a statement from the FOMC. And let's see what they say. It's going to be interesting no matter what. But I don't think it's going to happen. And I think that I think there's too much headwind at the moment taking place. And I don't see them making this step as yet, but you never know. Things can always, turn around maybe quicker than you expect. If it does go up, obviously we're going to have a high chance of, we should see dollar strength kick in pretty rapidly, I would say. If it doesn't, I don't know, we might see some ups and downs, and eventually maybe technicals take over again, in the sense that for 1-2 hours this fundamental is certainly the most important, and then if that news event is over, after a while, it's going to turn back into more technical environment. So from that point of view, a news event that is mixed, no increase, no rate increase, could see actually your dollar move up, some dollar weakness, but then eventually still move down, but with less momentum, I would say, obviously, than if there is a rate hike. GDP growth on the pound already in 40 minutes. Maybe the Great Britain didn't have the time change. I'm not sure, actually. I thought they did. Does anyone know? But if it's in 40 minutes, that doesn't add up. Dollar, the US didn't. That's for sure, I think, because it's 11:30. And they do have it a week later, I believe, this weekend perhaps. There's always that gap when time goes forward or backward. And the US does that a bit later, I think, typically, or earlier, or now later in any case than most of Europe. So that's something to be aware of. But so the U.S. session will actually start an hour earlier for Europeans, right? Not 2:30, but 1:30, and 1 o'clock is the news event, consumer confidence. All right. Good. Euro dollar. Yeah, the ECB news event, of course, we saw a big downside and a lot of candles below the 21 EMA band. If anyone wants this moving average indicator, which shows whether and basically the moving average is bullish or bearish by changing the color of this indicator, depending on the angle, you can definitely get that, no problem at all. Just send me an email and I'll send that to you. And you can send that email to this address right here. All right, now I talked about moving averages already quite a lot, and many of you have already joined. So if you are not familiar with me trading with moving averages, please say so, because otherwise I'm not going to, dive into, let's say, every detail. Otherwise, the ones that are here more often are going to find that repetitive. So, but if you are here relatively new or for the first time, let me know. And if there's anything unclear, ask in the chat, please. Okay. So as you know, probably know if you've been here a while, 21 EMA band, very strong at this moment because there were so many candles below it. You can see 20 candles below it here, then it touched it and still moved down, which is very logical because when there are that many candles below the band is going to be strong support and resistance, in this case resistance, because the price has moved with so much momentum. That was definitely the case here with the euro dollar. Lots of momentum to the downside. Band was used as resistance, made one more downside, and then started to go and make another bear flag. For those that like Elliott waves, these are kind of wave 4 structures, all right? Because the big impulse down is probably the wave 3. So this is a wave 4, wave 5, finishing another wave 3. This is a wave 4, probably go down again for another wave 3. You see what has happened now is that price has reached back to the awesome oscillator here, to the 0 line. So this has now completed one down move here. All right, so this particular retracement still was actually a smaller retracement as part of the bigger move down, as you can see. This is already a bigger size retracement, which you can see just by counting the candles as well. And it has brought the oscillator to the 0 line right here, which means that this is a retracement of a bigger order. So from that point of view, it's close to being completed, or still could continue a bit further, by the way. And then I would expect indeed one more downside. Now, why is that? One of the reasons is that the oscillator here is very strong. And you can see that it's certainly stronger than the previous move down. So from that point of view, this subscribes to the 1, 2, 3, 4, 5 scenario. So what's missing is the 5 still, right? Waves 2 and 4 typically complete when the oscillator goes back to the 0 line. The other option could be that it's an ABC, but in that case, the third leg here would not be that strong when it is very strong, which makes the red 3 more likely than the blue C. Secondly, there's not a lot of momentum in this upside, which makes also the red 4 more likely than perhaps, let's say, an ABC to the upside, or a 1, 2, 3 even to the upside. That does not look likely when looking at price action in red 4, which is now more likely red 4. So those are two things you want to look at. The oscillator, how strong is red 3, and is there any counter side momentum that should indicate that there's more likelihood of a bullish momentum and not a wave 4. At this moment, everything looks like it's a wave 4. So there's everything in play here to assume that there's a 1, 2, 3, 4, 5 going on, and not a ABC blue and then a green ABC up or a red 1, 2, 3 up. All right. So From that point of view, where could wave 4 end? Well, that's something we could use a fib for as well. And we could put the fib on the wave 3. And the wave 3, depending on how we count it, there are multiple options in fact, but let's use the most conservative one, which would use the smallest leg in fact, which probably would be somewhere from here or here. So we see the price already stopped roughly at this 23.6 fib. So let's use this one. All right. Any of these fibs, the 23.6 or the 38.2 fib, are likely turning spots for more downside. I would consider 50 fib the very maximum level to be expected for downside. If it breaks above the 50 fib, if it breaks above these long-term moving averages as well, and the trend line, if we connect the dots here, then the wave 4 analysis is out of the window and something else is going on. I would not expect price to break above the 50. I would actually expect price to stop here to 23.6 or the 38.2 fib. Another rule we can use for wave 4s is that it typically stops at the previous wave 4 of a lower degree, which is here. So that's a typical stopping spot as well, which is roughly equal to the 38.2 fib. The best would be if it moved up to the 38.2 fib, because then, we know, as a trader, we know that price has moved up to a reasonably deep fib for a wave 4. If it stays at the 23.6 fib, we're always kind of in the back of our minds, we're thinking, okay, it could still move up to that 38.2 fib. So that's something that can only be tackled if it stops here and does move down from the 23.6 fib to lower ground. The only way we can do, tackle that is by taking breakouts, and that depends from case to case where that breakout level is. In this scenario, I would probably only feel comfortable with breakout trades below the bottom, even below 110. I don't think I will feel comfortable trading it above as yet, but below 110, I think that we're getting enough confirmation that a breakout, that wave 4 did stop at 23.6 and that a continuation for wave 5 is occurring. Now, if we start using other tools, we might conclude that the 23.6 fib, I don't know, is indeed the most likely spot. But historically, I rather like the 38.2 fib. Now, if we start adding pivot points, I don't know, maybe we can come to the conclusion that this could be the turning spot already. But from a wave perspective and time factor perspective, I would still rather wait for the 38.2 or the break at the bottom. All right. The other thing we can do is add Fibonacci sequence levels. And see how far the downside has progressed. And we can see that this should be level 1, yes. Level 1, level 2, level 3, level 4. I'm not sure where level 5 is actually. Level 5 here. All right, so we're at level 5, which, for those of you that know these sequence levels, is a pretty deep movement already. Not very deep, but it's deep enough for me to say, okay, I would like it to go back to 4 or 3. In this case, 4. Why not 3? Because 3 is already too deep for wave 4. Sorry for all these numbers, but I'm talking about different numbers. This is talking about now the sequence levels, right? And I would like it to go back to the 4th sequence level here before continuing lower. And not so much to the 3rd, because then the retracement is too deep. And typically when it hits level 5, the green 5, it does go back to green 4 or green 3. Not many times does it really continue. It sometimes can. It just breaks below 5 and continues down to 6. It's possible, but on average, you'll see a bit deeper retracement after hitting 5. You'll see breakout between 3 and 4. Most often enough, a retracement to 4 to 3, and then move down to 5. In this case, not. In this case, it was just almost one fluid move down from 3 to 5. But the spaces between 3, 4, and 4 and 5, and 5 and 6 are the most interesting. In this case, if we go back to 4, I think there could be a lot of good space down to 6. That trade, I think, could be interesting today. Tomorrow, things change because tomorrow we're going to have the news event. We're going to have FOMC. That's still a bit later in the day. That's actually, I think, about 2 p.m. New York time, or 2 p.m. New York time, which is 7 p.m. Central European time, 1 hour earlier than typical. So there is a lot of time still before that event, but it's still lingering a bit. I think the market is still aware of it, but it's not going to totally pause until that moment. But certainly it's coming closer and closer. All right. Now, why would a retracement see resistance? The same rule that we used on the hourly chart, we can use on the 4-hour chart. Let's start counting the candles below the band. And you can see that we're up into the number 18 already. So anytime the 4-hour candles go back into the band, that should be resistance. So we got confluence. We have a 4th Fibonacci sequence level. We have a wave 4 of the lower degree. We have a 38.2 fib. And we have the 21 band on the 4-hour chart. 4 things, in fact, that say that 111, 20, 25 should act as resistance. So if price does get there, it will be resistance, I think. There's a high chance of that. Now, how about if price makes one more fall and then hooks back? Anytime it basically hooks back, doesn't matter when, I think, it should be resistance. So either now, or if it moves first to 109 and then goes back to the band, it should, there should be one more fall, technically. So either it will be something like this, that's one scenario, or it could be something like this. All right, 2 scenarios. So when it breaks 110, you can see what the target at the moment is, 109. Not maybe the main target. The main target, I think, is 107, 108 probably, 108-ish. But 109 would be the first stopping spot. If we look at this daily chart, let me get rid of my email address at the moment. 1 second. What is the first target on the daily chart? Well, it depends where you put the fib, but if you just use this logical top and bottom, it's also 109, 109.20. And after that, also 107-ish, anywhere 108, 107, I would say. Right? Got this bottom here too. So 109, 108, 107.50, 107. Now that would be kind of like a minimum ABC correction. Now we're getting a lot of lines on the chart, so let me just take everything off. When looking at the daily chart, that's just actually kind of a minimum, in a way, smaller ABC correction if it goes down to 108. Nothing very, very fancy about it, in fact. And, it would look very much like an ABC. It really needs to break below this bottom, in fact, before this is starting to act as a 1, 2, 3. 3 has to be very deep. So it has to really push a lot for this to translate into a 1, 2, 3. And that's something that remains to be seen. I think that is something that we really cannot answer in full until that news event tomorrow, whether it is an ABC or 1, 2, 3. I don't think that's possible. Both are really very realistic, and that really depends on how price responds to these two support levels, I think. Now, if it stays above, let's take a look at if it stays above these support levels or if it doesn't break both of them. In that case, when looking at a monthly chart, we probably are getting into a phase where we're going to have a bigger correction. When looking at the monthly candles and the band, we're now in candle number 14 that hasn't went back to the band. So from that point of view, at 1, 2, 3, 4, 5, 6, candle number 7, that hasn't broken this bottom as well. So if it doesn't happen this month, and there's only a couple of days left, then maybe the chance of retracement, a larger consolidation zone for the next, maybe even half a year, is increasing in my opinion. And we could maybe see something like this occur, where price challenges this level, but moves up again, and then keeps in the zone, and then eventually maybe next year breaks. And price could move back to the band and retest the band, and the band should become resistance. If it does break, then we can put a fib from here to here. We see price stopped at the 38.2 fib. Target would be 96. Of course, parity, psychological level to be aware of as well. But minus 272 target, main target there at 96. Minus 618 target, perhaps 85. If it breaks the bottom. So that's why personally, I think that a larger consolidation zone like this and a break later next year or somewhere next year is a more likely scenario, which means that I am more inclined to say that price is making now at the moment an ABC that will find support at around 107.50, 105. And make an upside again to retest these tops and the 21 band on the monthly chart. And then make that bigger break down to parity and 96 and maybe lower next year. But if I'm wrong and the interest rate does go up, well then this will not be an ABC, it will be 1, 2, 3, and we'll see a lot more downside. So that of course also very much depends on what tomorrow the FOMC is saying. And unfortunately, I asked, but they're not telling me. No, just joking. So yeah, we'll have to see. At the moment, I think an ABC is more likely. But within the C, if this is a C wave, C waves can have a lot of impulse, and there's a good chance of having this 1, 2, 3, 4, 5 in the C, and there could be a lot of extensions, in fact, down to that 105. A lot of pips potentially there, even if it is an ABC. And there could be a lot of these 3, 4, 5, 3, 4, 5, 3, 4, 5. Yeah. Does that make sense? That was pretty long talk about the euro dollar. Any questions? This is a trend line, by the way, as well, that price is at or challenging or has broken, depending on the time frame you're looking at. But I don't think that that is something to be very concerned about, considering the momentum on the 4-hour chart. One of the things, though, to be aware of is the fact that the moving averages here are intertwined on the daily chart. And when that happens, you often do get some retracement back to it. Now, in this case, I'm not too sure about that, but that is a typical rule for it. But considering the 4-hour chart, I'm not expecting a very deep correction, but I would, as I said, still expect that 38.2 fib. Oh. But if it breaks above this, it is becoming a, well, the bearishness might not be out of the window, but it's becoming less less ideal. Odds are a bit changing. No questions? So let's see if this is an ABC, as I think, or a 1, 2, 3. Depends on tomorrow. In any case, I think for today, a short from this resistance level is very good down to 109, 109.20. I think that's the best trade. Or if it breaks below 110, a breakout trade down to 109, 109.20. I think that, you know, whether this is a 1, 2, 3, an ABC, I think that those are interesting setups for today. And after that, we'll have to see how price, where price is at what point. All right. But I think that that is a good trade or good setups, regardless of, you know, the higher time frames, let's say. Within the validation level at the 50 fib and this top. Alrighty. Yeah, we can take a look at the year out. Let me, I'll finish the, well, we can look at it right now, why not? All right. Well, a bit of divergence between these tops on the weekly chart. Daily chart went back to the long-term moving average in the meantime, which could be a bouncing spot, in fact. We're also at the 21 EMA band of the weekly. So although maybe on the long term, the euro could go lower, could go all the way back to here, in the shorter term, I would say it's more of a bouncing potential now. It doesn't have to be exactly now, by the way, but roughly in this zone where we have these moving averages, this bottom, this top, perhaps got some zone here that could see a bounce. Now, the 4-hour chart does not have divergence. So one more break of this bottom could occur because of that. The pin bar. Ah, there's a pin bar here indeed. Well, I'm a bit leery of the lack of divergence on the 4-hour chart and the 1-hour chart. I do think that the upside has potential, but it might move one more lower, in fact, before we get a bigger rally to get divergence and then move up to, for instance, the long-term moving average here again. So probably I would be, when I look at this, I'm on the sidelines at the moment, waiting for divergence to happen. Not so much trading it to the downside because we are in a big support area on the daily chart. Now, let's see. Put a fib from here to here. Minus 272 target at 150, for instance, here could be a good bouncing spot to the upside. Or if it breaks above the 50 fib. Those will be two moments I think I'll be looking for. For our chart, we're in 1, 2, 3, 4. This is the fifth candle, I think. 1, 2, 3, 4, fifth. So if this candle is not bearish, or the next one doesn't break this bottom, we might see a bigger kind of consolidation up to the 38.2 fib, like the euro dollar. After which, then it could make that downside down to 150. After which, it can make that upside back to 156. Oh, so something like this. So, for my opinion, either trading to the upside from the target or to the downside from the 38.2 fib, or trading the inverse head and shoulders here on the right side, are all potential trades there. That move up to the 38.2 fib seems a bit more likely if this and next candle don't break the bottom, which might definitely happen. I mean, there's nothing that says that couldn't. And so I'm not sure where your target is and where your stop loss is, which is important. But that's my view on the euro odd. All right, and yeah, I don't know exactly the parameters, but could be good to exit maybe the long at 153.70, which is the 38.2 fib. Alrighty, pound USD. Let's see. Got a triangle going on. Support level here, resistance level up in here. And from that point of view, obviously, well, the triangle is important, but I think that we will get, looking at so far what we've seen in price action, we'll probably get a more bearish break than bullish break. And so far, I mean, let's take a look at the 4-hour chart. 4-hour chart is actually getting into a flat movement here, into a consolidation zone. Hourly is bearish. Well, it could, from my point of view, it could easily make a ABC zigzag up to resistance, after which that would be a good resistance spot. So one of the things I like about the pound dollar is a short from resistance here. And that could be easily done by putting a fib from here to here and waiting for one of these two fibs to be used. Now the 1 hour is bearish, I know, the moving averages are bearish. That's why I'm looking for shorts actually on to the downside. Let's see, 4-hour chart, choppy kind of moving averages. That's why spikes up will actually, I think, slam into resistance also as well, because the average will drag it back down. Yeah, sorry about the daylight. Yeah, this daylight savings times indeed can be confusing. And yeah, I can imagine. No problem, Beverly. But we are kind of, let's see, compared to GMT time, we are now on a different time indeed. Let's see, we moved 1 hour closer to GMT, so it's GMT wise, it's 1 hour later now. From now on for the rest of the northern hemisphere, at least winter season. Yeah, so I think that resistance is a good play here. Now, if it does break support before going up to the 61.8 fib, there could be that breakout trade as well in these zones. But I think euro dollar looks a bit better, more impulse to the downside, and therefore I would expect the euro dollar to break earlier than the pound, personally, this moment. Would seem more interesting as well. I think I like the pound USD specifically in this zone. The top of that triangle, one more time at the top of the triangle. There's not as much momentum. It did happen in 5 waves, the downside, but there's not a lot of momentum. Yeah, I think that's about it. I don't see any other angles that need discussing. So I think that will be the best probably on the pound USD. Breakout is something I will keep an eye on, but not as exciting though as maybe the euro dollar. Dollar yen in a big resistance zone, in fact, right here. And not surprised that we're getting a turn in this, somewhere in this resistance level. Talked about it in yesterday's recap video too, that I would like weakness right in here. And well, unfortunately, it didn't really get that high. It was also not during my trading time, so I didn't see it happen. It went up to the 50 fib, which is not a bad, almost to the 61.8, which is not bad. It just happened in my evening and I didn't see the charts anymore. That can happen. But it was a good rejection level. It did make kind of this, as I said in the video yesterday, this kind of motion to the downside here. This was a good short, as I think that the resistance level was strong. We had 5 waves up like this, so an ABC correction like that down to the long-term moving average, I think was a very good likelihood. We had divergence between these tops, so there were a lot of good things about the short up, down, or up in here. Price is now getting to the first target and the long-term moving average, but it could easily go to the minus 61.8 target, which is 120 psychological level 2. So just because price is now at the long-term moving average and at targets doesn't mean I'm looking to go long right away. Why? Because if you look at the bigger zone of the range, we're still at the top side of the range. So I would not consider that necessarily a good buying spot. But actually, it could just be a small bouncing spot, and we might find one more follow through to the downside. So considering that the dollar yen is still on the higher side of the zone, rallies I would say are more set up for shorts at this moment. Now, not right now because I think it needs to retrace a bit. As either here or a bit lower could be bouncing spots. Alrighty. Nope. One second, folks. Let me reset this. So, in the meantime, how was your weekend? Did you have a good time? We got 1 hour extra, so that was always pleasant, I guess, isn't it? To have a bit longer weekend. We're going to take a look at the AUD USD right now. We're going to take a look at the Kiwi. We're going to take a look at the CAD. We're going to take a look at the Euro Yen, Pound Yen, Pound AUD. And then we'll take a look at anything you want to look at. Maybe take a look at DEX, right? And take a look at gold, silver. I like the 1 hour extra. I know it's only 1 hour, but I don't know. Makes it somehow seem a lot longer. I don't know. Maybe it's me. I don't know why. Odd USD. Well, maybe a bit boring pair to look at because it's stuck between these support and resistance lines. And well, if you look at the moving averages, if you look at the bullish momentum, I would expect, I think an upside break is more likely. And from that point of view, we're back at the long-term moving averages. So I would say a breakout here to the upside is certainly a very decent likelihood. You got momentum here on the daily chart breaking above the band twice, but not reaching the tunnel as yet. So that space from now, band is being used as support. Look at that. So there's that space up to that tunnel right there. So that's the daily chart. Let me take a look at the weekly. And that's just a small retracement on the weekly anyhow. Just one more small push on the weekly. And we'll get back. Once it gets up to here, it's still a resistance spot. With tops in here and bottoms in here and the long-term moving average. So it'll just be a small breakout trade, and we should see resistance kick in around, the long-term moving average around 75. So from that point of view, a 4-hour chart, let's take a look. Yeah, 4-hour chart here, a breakout above this top and that trend line. There's that breakout space right in here for upside. Let me measure how many pips that is. Between 140 and 200. And the risk is about the same. So it could be even a pending order, but it's a huge risk in terms of pip size. So it could be better just to let it break, wait for a bit of a pullback on the lower time frame, put the stop loss below the candle low, take the entry under upon the retracement, and the stop loss is a lot tighter. So from that point of view, I think that it makes sense to hunt for longs above 73, 72, 75, but maybe not jump in one, if you see what I mean. This is bullish territory, but a pending is not necessarily needed right away. So that looks good for upside on the audio USD, I would say, for this week. Of course, as always, be careful of the news event. All right, Kiwi. Let's take a look at that. Edith says she had a great weekend with beautiful weather. Excellent. That's great. Perfect. The weather here is, it's getting a typical fall weather with a lot of cloudiness. I don't know what happens with the sun when October arrives, but it's running away from us. I don't know why. Let's see. Kiwi is at the tunnel already on the daily chart. A bit different with the Aussie. Aussie has that space. Now, the tunnel is a rough region. It doesn't have to necessarily turn right at it. Still poke through it a bit. But obviously, it's pleasant to have that space on the Aussie. Very choppy 1 hour chart. Yeah, I probably would not be that interested in trading it actually at this moment. Maybe to the downside if it breaks this support trend line again. Back to the 4 hour tunnel. Maybe more bearish than bullish, in fact. But very choppy. I might just keep an eye on it, but not really trade it. Let's see, dollar CAD. Hit the 6th level there. Choppy 4 hour chart as well. Daily chart. I don't know. Weekly chart has a bit of divergence between the recent tops, daily 2. And although this is moving up, I would say it's trying to fight against these fibs probably. 38.2 to 50 to 61.8. Wouldn't be surprised maybe to see a bigger correction like this. I'm not too convinced about the upside at this moment. I like the pound, the dollar yen even more, the euro dollar more, the Aussie more. It doesn't look that great. All right, let's take a look at the euro yen. And I might be wrong. There could be maybe fantastic trades, but I mean, there's so many pairs to look at that sometimes it's good to to not over analyze necessarily every single time frame, right? It's good to choose the ones you think that have the best setups. All right, let's take a look at the euro yen. That also has a very choppy daily chart. Well, at this moment, I would say, if anything, there's both sides have potential. This has a momentum, this has a momentum, and now this is a correction. So really, both sides, both breakouts have their own kind of logic, right? Down momentum, down continuation, up momentum, up continuation. Trend line is probably going to be important here as well. Which trend line though? It's kind of a rough zone. Somewhere in here and somewhere around here. Weekly chart would be ideal if price gets up to this level. And we have a beautiful head and shoulders potential. And if this trend line breaks, it could be a very long-term break. That could be a sweeping fall if it breaks. And of course, that's a big if this support level breaks down to 125, down to 120, down maybe to 110, who knows? Depends on the momentum. If it breaks to the upside, got to keep an eye on this resistance zone, which could be very important. That's the weekly. Now back to the daily. A break above this resistance, there's space maybe up to there. That could be a good signal. And as we said already on the weekly chart, break below 132 here would be needed probably for some downside. So not at the moment that interesting to trade, but maybe next month or maybe even later this week, who knows. Pound yen. Some lingering divergence as well, which should, as the rule says of thumb, bring us back to the tunnel on the weekly chart, which means that on the daily chart, we could see price maybe respecting this fib and reaching that minus 61.8 target, which is equal to the tunnel on the weekly chart. And from that point of view, price already stopped at the 50 fib, and I would say that any of these fibs are probably still resistance spots as well. And here are breakout spots. Bit messy as well, just like the euro yen, I would say. Messy 4-hour chart. Messy 1-hour chart. I don't like it that much at this moment. I would probably just keep it on the daily chart at the moment. I think that's probably the clearest chart at this moment in the weekly. Anything lower seems to be messy. Not the football player, but really the state, state of the status. Alrighty. Pound odd daily chart. Euro odd seems like we're in a bouncing spot, but pound odd, not sure. It is actually respecting the resistance, and the 21 band is being used at the moment. And this one is, yeah, it actually came very close to hitting the tunnel. Could be considered a hit. Now it's in hitting the band, and the zone in here is getting quite tight. Slight weekly divergence too, which means that price could retrace all the way down here. So I would say that especially below here, and here those are breakout zones, but we're talking about a lot of things that have to happen. Or here is maybe still a resistance spot. Doesn't look that appealing to me at the moment, really. I think there are better pairs. Alrighty. DAX, big upside. Doesn't have to be now, but it's certainly going to be running into some resistance spot. Last week was a very bullish candle, so I do expect this week to ultimately get a continuation. This is last week's low. I would not expect the break of that last week low. So I think we can put a fib from last week's low to last week's high. And I would say the band is a good bouncing spot, just like the euro dollar, 38.2 and the band. I think could be a good bouncing spot for one more upside to the resistance level. Oil is heading back lower again. Let's see, after getting some divergence between these tops, now we're testing this bottom. That's going to be an interesting break or bounce spot. Gold, let's see, does it have a bit of divergence between these tops? No, nah, did break it a bit, but very little. But not divergence, very close to it. Kind of looks like a bull flag at the moment on the 4-hour, on the daily. Kind of messy intertwined moving averages. Well, it is pushing above the 21 band on the weekly chart. So if it manages to use the band as support, I would say there is this space there up to the long-term moving average. So at the moment, it's slowly but surely, it's not sure yet, but it's slowly but surely looking more bullish. But it's still on the early side. This is still a mess. If it does push above the 4-hour bull flag here, then that could be something to think about, but also something to be very cautious of. But yeah, there's that potential for upside like that. Now, downside, I would say this support trend line is really needed to be broken. Let's take a look at silver. Silver is the same situation, in fact, as gold, and kind of making a consolidation zone here. So if it breaks the top, there's that breakout potential as well to the upside. And price could get up to the long-term moving average, which is around 20, obviously psychological level 2. All right. Let's take a look at, let me just pick one exotic pair, see how that's doing. But do you have any preference? Does anyone have a preference for exotic pair? We looked at all the majors and some important crosses and stuff like that, but anything that that jumps into mind that you think is interesting, or even not interesting, doesn't matter. We can look at it together. But there are a lot of these crosses, and I can't choose, so I'll let you choose. Well, Caitlin, I just looked at golden oil actually. Sorry if I should make my voice maybe a bit more louder, I guess. Gold here, I was looking at it, and just a quick summary then. Okay, cool, no problem. Yeah, we're getting some upside here, and we do have divergence between these bottoms, so move up to the long-term moving average could be possible. And band is turning a bit, but there's no space between the candles and the band as yet. All right, so it's very early. But if it does break out of this small bull flag, then there could be maybe that breakout space a bit to 1200, and later on, even probably something like this, hit this top of this trend line, make a small retracement, and if it and then the band again up to 1250. I know, I think it's very tight trading and not very, very, very spacious, but it's possible, something like that, to find breakout trades to the upside. Downside, I would only consider really on gold below this trend line. Has to certainly be, the moving averages certainly have to be bearishly aligned here on the 4-hour chart. So I would say some space for retracement to the upside, unless price really starts to break below this long-term moving average. Oil is challenging. I don't look at oil too much, so don't have very much to say about it, but it is challenging this 43.50 support level. And I guess it could be an interesting level for bounce or break. Bounce, maybe back to retest this resistance here, and a break to retest this bottom. Let's see, euro ruble and dollar ruble, that's indeed very exotic, and I have not traded it either, and so I can't really say much about it. Of course, I know of the massive movement it had. I don't know exactly when, somewhere this year. Remember when it really flew up? But other than that, I never looked at it either. So, but so it's difficult for me to really say anything about it. But if that one is moving a lot, then do you know what the price level is, Edith, by any chance? I can pull it up. I'm not sure. I guess I should have access to that. I do. All right, let's take a look. I thought I wasn't even sure if it was on the platform, but it is. I did. Oh, this is that big spike. But that was not even this year. Oh, it was last year. Sorry. December last year already. November, December. Continued a bit in January. No, actually, yeah, November, December. That moved up from 40 up to 80, doubled. And let's see, had made a fall retest, kind of staying in this range. Looks like it found an equilibrium. Let me put on the moving averages. Yeah, it's at the daily long term, as you can see, so it's kind of back to the mean. So from that point of view, I think that if anything, it's more of a breakout scenario to the upside. Now, I'm not sure if there are any, if there's any ruble news or something like that, but that's something to be aware of. But otherwise, yeah, it looks like there's a bullish alignment, maybe more dollar strength against the ruble from that point of view, unless price breaks below the long-term moving average. All right, let me take a look at, let's take a look at the heat map. That's a good idea, Edith. Let's see what's going on there. These are stocks and also the ruble is here. Indeed, big mover, 1%. Stocks 2, Microsoft, Google, and downside Exxon Mobil and Apple and Hewlett Packard. These are our currency pairs, and you can see pound yen. But let's take a look at yesterday, Swiss yen. Oh, can we take a look at Swiss yen then? And pound Swiss yen. Okay, let's take a look at those two. Swiss yen and pound Swiss yen. Swiss yen actually a good one because my trade idea failed last week. In fact, on the Swiss yen, I was looking for upside continuation and ultimately turned around right in here as the trend was up, but then failed to continue. And 1, 2, 3, 4, 5, 6 candle was horribly bearish, signaling the end of that opportunity to the upside, or the trend as the upside, I should say. And well, it was the 5th candle that I was looking at, so there was still reason to believe that it could continue. The 6th one kind of ended that trend, and the 6th one ended that upside and kind of started that downside, as you can see. It's still lasting to the downside, in fact. And the next candle after that one actually breaking this support trend line. So there was some good downside potential there when this maybe rising wedge in retrospect we can see. But anyhow, so with this break, we're getting close to, I would say, a potential to get to the long-term moving average and the next bottom right in here. So there's good downside space. right here. And now we're still at 122 bottom. So no reason to short right now, right here. I would need price to hook back, let's see, to the 21 band probably. It'd be good if it hooked back somewhere in this small little consolidation zone right in here. So if it does that, bounces off the bottom and hooks back to the band and that resistance zone, I think that could be a good short to position myself in a continuation like this on the daily chart. Right there, down to the long-term moving average, all the way down here. There's a lot of space. Maybe a more conservative target could be something like on this daily chart, putting a fib on this last swing high swing low and waiting for the minus 61.8 target. Let's see what it is. Right here, halfway. And then the next target could be all the way down. All right, the other big mover was pound Swissy. Now let me take a look at where the sequence levels are. The sequence level indicator is somehow giving me a bit of trouble lately. I don't know why. Didn't in the past. Maybe I have to, I don't know, I changed the name of it. Maybe that's why. Not sure. We use the other one then. There it is. So level 1, 2, 3, 4, 5 has hit the 5th already. Now a pound does typically, have the ability to move further than other currencies. So the 5th level for a pound is less disturbing than less chance of a retracement than other pairs perhaps. But let's see. Yeah, from that point of view, we could be in a breakout trade up to 6. In fact, it hit the EMA here, the 8 EMA, posted a candle close above the 5th level. Typically, I would not think that's a good breakout trade on other pairs. I would like to see a retracement first, but on the pound, those things are less worrisome. There is divergence though between these tops, and that I think is a trouble for this pair. There could be double divergence, but ultimately I would like to see it actually go back to long term in this 4th level. So no, would rather wait for retracement, but then this could be a good long indeed for follow through. Now, it doesn't have to get back here. As I said, it could continue. Is there any way that I could still get in that trade? Let me see if I wanted to. There's nothing wrong with skipping a trade, but well, there's double divergence in the meantime on this 50-minute chart, in my opinion. So no, probably not. I probably skip it rather. I mean, there is that potential, yes, but no, we'd rather wait for, at least a retracement, I would say, up to 30-minute tunnel here. And the thing is, the 4-hour chart is still in the momentum to the upside. It's still a bullish momentum, but I don't know if it's worth it. It is easily, this can still be considered like one push up. So, but I think the divergence is too lingering. All right. Now, if it does push a candle close above this fractal, maybe, but I don't want to get tempted. So let me look at a different chart. The more I start looking at this, probably the more evidence I start finding in something that could merit a trade. But the divergence, I think, is really too skewing it too much against it. So, all right. Well, let me make a recap then. If you have any questions, let me know. Otherwise, I'll make a recap. First of all, though, tomorrow we're going to take a look at strategy, same time, same place. Nat is going to take a look at chart patterns in this price action training school. There have only been 4 webinars in this training school so far, so there's plenty of time to catch up and look at the new one here that he will deliver tomorrow evening. And Thursday we're going to take a look at the difference regarding broker regulations and the differences between the types of brokers and stuff like that. That's Thursday evening. So I hope to see you in these webinars. And quick recap, basically looking for euro dollar downside below 110 or as a retracement up to 111.25 up to the 38.2 fib. Pound USD would like to see it back up here, higher fibs at 61.8, 78.6 fib. Dollar yen looking for pullback to the moving average, not maybe now, but a bit lower from maybe here for one more follow through to the bottom of the range. Audio is the breakout trade to the upside when it breaks above these resistance levels, bullish territory. Wouldn't jump in a long right away though. Kiwi CAD didn't look that interesting. Euro yen only on the long term, so maybe it doesn't make sense to really pay attention a lot to that. Euro, same thing at the euro dollar. Could still make one more dip, but from the 38 to fib, this and next candle will tell. And that those were the most interesting. Swiss yen as well, maybe, as recently explained. And I think that's it. Pound odd didn't find that interesting. Euro yen, pound yen also is a mixed kind of level, only maybe if it gets higher. Ultimately, I think we're going to see a downside break, but it doesn't have to be here. It could be from the 50 fib. That could be interesting. So it's like the euro yen, more of a potential long-term potential trade. Now, not an ideal environment if I look at the hourly and 4-hour at least. Now, if I dive in, maybe, I don't know, maybe there's a trade to be found on lower time frames, but I like to have 1 hour, 4-hour, those charts looking good. Makes it, I think, easier to trade. And but it depends. If there are good charts to be found on the 4-hour chart, it's always preferred to focus on those, I would say. So, well, that's my analysis for today. Thanks for being here, and wish you all good trading. And hope to see you this week later on. All right, cheers.